Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Next week, one of the most important event which the entire market will look forward is Jackson Hole meeting, which will start on 22nd of August and it is going to end on 24th of August. Now, let us first understand what is Jackson Hole meeting all about. Jackson Hole is a meeting which started in 1978 where all central banks across the world come and meet and where they discuss economic outlook about different countries and interest rate policies. Now let us understand why Jackson Hole meeting is important. Suppose a central bank comes and gives an unexpected outlook on their monetary policy that might create an volatility in all major currencies. Now let me give you an example. If Fed comes and tells that they are going to do quantitative tightening or they are going to increase the interest rate, at that point of time dollar is going to get stronger. And if they say that they are going to do quantitative easing or they are going to go and reduce the interest rate, at that point of time dollar index is going to fall down. In recent past, say for in example 2010, where before the Jackson Hole meeting, the stance of the central bank was accommodative. And when the Jackson Hole meeting came and they have announced that they will be doing quantitative easing too. So ideally, dollar index should fall, and dollar index has fallen close to 4.5% in 2010. In 2022, before the Jackson Hole meeting, the stance of the central bank of US was that they are not going to increase the interest rate aggressively. But in 2022, Powell said that they are going to increase the interest rate aggressively, which resulted the dollar index to move higher. Now let us understand what do we expect in 2024 Jackson Hole meeting. There can be two case scenario. Case scenario 1, whose probability is just 10%. In the Jackson Hole meeting, if the Fed says that they will be data dependent on their approach, they will see the data and then they will decide whether to cut the rate or not. If this kind of statement is coming, then dollar index might trade in a range bound momentum or might go little up. The second scenario, whose probability we are expecting is close to 90%, where Fed comes and says that in coming months they have to go and cut interest rate aggressively. If that happens, then dollar index is going to come down. Now let us understand why we think that Fed will be dovish in his statement. There are three important reasons for the same. First reason is US national debt has been rising at the fastest pace. Currently, that national debt stands at $35 trillion. It has increased by 59% in last 5 years. Second, their inflation has been cooling off from 9.5%. It has come down below 3% in the last month's data point. Third important aspect is their unemployment rate. Currently, their unemployment rate is at 4.3%, which is highest since October 2021. And hence, we believe that Fed is under tremendous pressure to cut the interest rate. Now, let us discuss the outlook on global currencies. Basically, we will start with 10-year yield. 10-year yield currently is trading near 3.88. We are expecting that gradually it is going to move towards 3.60 and 3.30 kind of levels. Dollar index currently trading near 102.40 kind of levels. 103.50 is going to act as a very strong resistance for dollar index, and gradually dollar index should move towards 100.50 and 100 kind of levels. Euro USD, which is currently trading near 1.10 28 kind of levels, 1.09 is going to act as a strong support for Euro USD, and ideally it should move towards 1.1250 kind of levels. Now let us discuss outlook on GBP USD, which is currently trading near 1.2829. 1.27 is going to act as a strong support for GBP USD. Ideally it should move towards 1.3150 kind of levels. USD JPY, which is currently trading near 147.58 kind of levels. Ideally, 149 is going to act as a strong resistance for USD JPY, and ideally it should move towards 145 and 142 kind of levels in coming days. Now let us discuss the outlook on rupee. There are few challenges for rupee. For example, trade deficit data which came few days back was showing that our trade deficit has increased to the highest level in last 9 months. That is because of lowering of exports and higher imports. We expect trade deficit to continuously increase in coming days because of two reasons. Reason number one, our custom duty on gold has been reduced, which can take the gold imports higher and which can widen the trade deficit. Second reason is that CNY INR is continuously moving higher. For example, earlier it was trading close to 11.33 level. Current now it is trading near 11.75 level. Our trade deficit with China is close to $85 billion. If CNY INR continues to move higher, it can create more pressure on our trade deficit. On the positive side, India's weight on MSCI Global Standard Index has been increased from 19.2% to 19.8%, which can attract inflows close to $3 billion in Indian equity market. Apart from MSCI ka flow, there are other positive points like inflows we are expecting from JP Morgan bond index. 10-year yield of US is under pressure. Dollar index is also seems to be under pressure. All of these positive points will help rupee not to break a key resistance level of 84.05 and 84.10 kind of levels. On the downside, 8380 is going to act as a strong support for the pair. If RBI stops buying near the support level, then we can see a sudden appreciation of 30 to 40 paisa on rupee. Now let us discuss strategy for thin margin exporters and thick margin exporters. Uh, they should not get complacent and they should on a continuous basis hedge as per their policy and costing, giving below the details for the same. Now let us discuss strategy for importers. Importers should not panic as rupee is currently trading near overbought zone. They should keep a stop loss of 84.05 and wait for a lower level of 83.80 and 83.65 where they can cover 50% of their near-term imports. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.